Welcome back to the cryptoworld channel, everyone. My name is Josh, and right now, Bitcoin is still coiling up, getting ready for a massive move coming very soon, as shown by this chart and this chart, which is now flashing a massive signal, while more liquidations are likely coming very soon, while Ethereum is now forming a new pattern in the short term that we need to pay attention to. So I'll be talking about all of that and more later in the video, so definitely watch to the end. First of all, starting off on the 3-day Bitcoin chart, and right now the price of Bitcoin is potentially still forming a massive inverse head and shoulders pattern, but it's important to understand that at least as of right now, this potential inverse head and shoulders pattern is not yet confirmed, because what we need to see for this pattern to actually complete and confirm is we actually need to see a bit more of a short-term pullback and then a recovery over the next few weeks in the price of Bitcoin, and then we need to see a confirmed breakout above this neckline, which is sitting at around 71.7k. And so until we actually see that play out, this pattern is not confirmed or in play. But if we see that play out, if we see this type of price action basically completing the right shoulder and then confirming a breakout above 71.7k, then that will activate this bullish price target for this pattern, which is sitting at around 86 to 87,000. And so from the point of the breakout to that price target, we're talking about potentially around a 21% move to the upside in the price of Bitcoin if this pattern actually confirms. So if we complete the right shoulder and then confirm a breakout, which as of right now obviously has not yet happened. And if we're zooming out on the Bitcoin chart, taking a look at the 4-day time frame and taking a look at the Bollinger Bands indicator and the Bollinger Bands width indicator, and I explained this chart and these indicators in more detail in previous videos here on the channel close to a week ago now. But in case you're new to the channel, just a really quick rundown. Basically, the Bollinger Bands looks to include the price within the Bollinger Bands. So when we see a very volatile move, the Bollinger Bands expand. But when we have a period of very low volatility, the Bollinger Bands contract. And so in other words, just before the next extremely volatile move, we usually see very tight Bollinger Bands with a small width between the Bollinger Bands, which means the Bollinger Bands width indicator is down here. And we can see that time and time again, this has proven to be a fairly accurate signal telling us that we are getting very close to a very volatile move, a massive move about to happen in the price of Bitcoin. And if we're looking at this first example back in November 2022, this signal flashed within around 1 week before a massive volatile move, which was basically a move almost straight to the downside over the next 1 week of around 20 to 30%. And if we're taking a look at the second example right here, that was around June 2023. And first of all, we waited around 1 to 2 weeks before we saw that next volatile move. So this was around a week or two early, but we still ended up seeing an extremely volatile move, almost straight to the upside of around 20 to 30% within a week, a couple of weeks after this signal actually flashed. And if we're taking a look at this third example, that was around October last year. And what came next was basically within around 1 week, we had an extremely volatile move, almost straight to the upside of around 20 to 30%. And if we're taking a look at the fourth example, that was around February this year, and what came next was within around 1 week, we saw an extremely volatile move of around 20% straight to the upside within about 1 week. And so we're talking about potentially around a 20 to 30% move in the price of Bitcoin coming most likely within the next few weeks, because this is actually the lowest the Bollinger Bands width indicator has been in around 1 year, since around June 2023. And obviously we've spent quite some time, a couple of weeks now, with the Bollinger Bands width indicator at very low levels, basically telling us that the Bollinger Bands are experiencing a massive squeeze, getting ready for a huge move coming very soon. And once again, when I say very soon, I'm talking about very soon relative to the 4-day time frame, which is usually talking about within the next few weeks or so. And so obviously it is still possible we could experience a bit more sideways price action in the short term if we're talking about the next few hours or days, but this price action is likely not going to last much longer. When we're talking about a few weeks from now, we're likely getting closer towards a massive move coming very soon. And just for fun, measuring out a 20 to 30% move, if we were to play out a 20% move, let's just say in the bearish direction, that would be a move down towards around 54,000, or a 30% move would be a move down towards around 47,000. But on the other hand, if we see a bullish move of around 20% from where we are right now, that would be a move up towards around 81,000, or a 30% move, that would be a move up towards around 87,000. And so obviously that potential 30% move would come perfectly in line with this price target close to 87,000 for this inverse head and shoulders pattern if we actually complete the right shoulder and break out above the all-time high. And keep in mind, at least as of right now, we're technically still within a larger bullish market, because as of right now, we have not yet broken the higher low, higher high price structure on these larger timeframes here. And so due to that, it is technically more likely that the volatile move coming within the next few weeks is more likely going to be a bullish move rather than a bearish move, considering we are in a larger bullish market, at least for now. Because obviously that first example right here in November 2022, that extreme volatile move, that was the end of the 2022 bear market. We were still in a bear market at that stage. And if we're taking a look at this daily Bitcoin chart, right now the price of Bitcoin is still running into this area of support, sitting in between around 67,000 to 68,000. So at least for now, that is still the area of support to pay attention to, which has been holding as support for over a week now. But if we were to see a confirmed break with daily candle closes below 67,000, then in that case, we could likely see a move back down towards this area, sitting in between around 63 to 64,000. And so basically, if we confirm a break below 67,000, at least when we're talking about the short term here, that would be a short-term bearish signal for Bitcoin if we confirm a break below 67,000. But until then, we're still looking relatively neutral just in the short term, chopping around sideways in this sideways price range in between this area of support and this massive area of resistance, which we rejected from close to 2 weeks ago. And that area of resistance is still sitting in between 72 to 74,000. And so ultimately, we're not going to see a massive move in the bullish direction until we finally confirm a breakout above this resistance. And if we're zooming further into the short term, looking at the 4-hour Bitcoin chart, as I mentioned in my last video here on the channel, we do have a new symmetrical triangle pattern, also known as a horizontal triangle pattern, with a descending line of resistance and an ascending line of support. And as of right now, this line of support is sitting at approximately 67.2k, and this line of resistance is sitting at approximately 68.9k. And so ultimately, we need to see a confirmed breakout with candle closes either above this resistance or below this support in order to set up the next short-term move and the next price target for this pattern for the price of Bitcoin. And speaking about the price target for this pattern, if we're taking a look at the bullish price target, if we confirm a breakout above that line of resistance, then in that case, that will set up a bullish price target at around 74.7k approximately. But on the other hand, if we fail to confirm a breakout above resistance and we actually see a confirmed break below that support line, then that would set up a bearish price target for this pattern at around 61.8k. And it doesn't matter what direction the price breaks, whether we break bullish or bearish. As traders, we can make money in either direction. And in my last video here on the channel, I talked more in detail about a potential trading strategy that we could use to make money in either direction here. And just one thing that I would add to that trading strategy, which I explained in my last video, is of course the risk management and the point of invalidation for a breakout trade like this. And so, for example, if we break to the downside below this support line, the point of invalidation once we begin that trade would be a breakout back above that previous line of support. Basically, that would invalidate the bearish break to the downside. And so in that case, if we begin a break to the downside and we see some initial confirmation like candle closes, and let's just say if I start entering a small short position after a few confirmation signals that we're breaking to the downside, in that scenario, in my trading strategy, I would have my stop loss just above the point of invalidation. So basically, if we invalidate the break to the downside and come back up, then that stop loss would close the trade at a small loss to avoid any further losses. And it'll basically be the same thing for the bullish scenario, but obviously in the opposite direction. If we confirm a breakout above a resistance and I start entering into a small long position once we see some confirmation signals that we are breaking bullish, then in that case, the point of invalidation would be a break back below that previous line of resistance. So in that case, I'd have my stop loss for the trade just below the point of invalidation to avoid any further losses in the case of an invalidation. And so as always, when it comes to opening a new trade, there's always going to be some risk on the table. As always, when it comes to potential rewards, there's always going to be some risk involved. But the aim of the game is limiting risk while trying to maximize returns. And basically, with my trading strategy, as the trade moves further into profits in either direction, I move my stop loss at least to my entry and ideally into profits. And that's exactly what I did with this long position that I've been talking about over the last few weeks here on the channel. As you can see right here, I entered this long position at much lower prices, which I shared here on the channel that I'll be doing that back then. And as of right now, I've already secured some profits out of this position, and my stop loss is already well into profits above my entry for this long position. And so that basically means that as of right now, this is essentially a risk-free trade, because all of the risk that I took for this trade was at the beginning when I was entering the trade. But right now, with my stop loss in profits, even in the worst case scenario, if the price just crashes right now, that would trigger the stop loss and close the rest of the trade in profits. But as always, this is not personal financial advice for you, because I don't know your personal financial situation. I'm just revealing my trading strategies that have been working for me, which, as you can see right here, this trade has made around 40,000 US dollars within just a few weeks. And if you also want to take trades just like this for yourself, then personally, I'm taking this trade over on Bybit. So I'll make sure to leave a link to Bybit down below this video in the description and in the pinned comment. And if you use that link down below this video to make a Bybit account and deposit on that account, then you can get up to a $30,000 deposit bonus, but only if you use that link down below this video. And also, the first link down below this video will take you to this page right here, which is a massive $1.5 million trading competition happening right now over on Bybit. So if you're going to be trading crypto anyway, you might as well check this out to potentially win a share in a $1.5 million prize pool happening right now. But if a trading competition isn't really your thing, there's also a massive lucky draw happening right now on Bybit for a limited time. And so just by trading on Bybit using the second link down below this video, it'll take you to this page right here. You could potentially win up to $100,000 in this lucky draw, or free Bitcoin or Ethereum, or a trip to an F1 race. And so once again, if you're going to be trading crypto anyway, you might as well check this out. And once again, the second link below this video will take you to the lucky draw, and the first link below this video will take you to this page, which is the trading competition. But for whatever reason, if you cannot access Bybit, or if you cannot KYC on Bybit, there is also Bitflex, which is another crypto exchange similar to Bybit, but you don't need KYC for Bitflex. And so I'll also make sure to leave a link to Bitflex down below this video as an alternative crypto exchange. And if we're taking a quick look at the Bitcoin liquidation heat map, we can see right now in the short term, we do have a new area of liquidity building to the upside just above 69,000, more specifically in between around 69.1k to 69.2k. And so basically, if we start breaking out above that area on the chart right there, then that could potentially trigger a small short squeeze just in the short term, pushing the price a little bit higher. But with that being said, even though a lot of liquidity is now building to the upside, we still have some liquidity to the downside just in the short term at around 66,500 approximately. And so that's why I've been saying just in the immediate short term, we're looking relatively neutral, but very soon the price will be forced to either break to the downside below this support line or above this resistance line. And the moment that starts happening, once again, that will trigger the next move in the price of Bitcoin, the next significant move potentially towards the next price target. And if we're taking a look at Ethereum on the daily time frame, right now the bullish breakout for the bullish falling wedge is technically still active with a price target at around 40.70. And that price target and this breakout and this pattern would only invalidate if we see a break back below around 3.2k, which obviously as of right now has not happened, which means the breakout and the price target is technically still active and in play. But with that being said, taking a look at the 8-hour time frame, and just recently, over the last one day, the price actually rejected again from this Fibonacci level of resistance, because we actually retested that level and now we're experiencing a small rejection from that level, which by the way is still sitting at around 38.20. And so at least in the short term, that Fibonacci level of resistance is still the resistance to pay attention to at 38.20. But if we see a confirmed breakout above that level, then in that case, the next short-term resistance is sitting at around 39.50 approximately. And above that, we have more resistance just underneath 4.1k based on this previous high. And as for short-term support, we do have a little bit of support at around 37.10, and below that we have this significant area of support in between 3.6k to 36.50. And if we're zooming further into the short term, looking at the 4-hour time frame, as I mentioned in my last video, we now have a new hidden bullish divergence in the price with higher lows in the price action and lower lows in the RSI. And so technically speaking, that is a hidden bullish divergence, which is typically a bullish trend continuation pattern. But with that being said, a hidden bullish divergence usually is not as strong as a regular bullish divergence. And so I would not necessarily expect a massive bullish move just based on this hidden bullish divergence alone. And also it's worth keeping in mind that this hidden bullish divergence would be invalidated if we see a confirmed break to the downside below this previous low, so below around 37.20. And also what we are seeing right now on the 4-hour time frame, while the price is holding above this slightly ascending line of support, we are potentially forming a new head and shoulders pattern here on the 4-hour time frame, with a left shoulder, a head, and right now potentially a bit of a right shoulder forming. But as I said earlier in the video for Bitcoin and that inverse head and shoulders pattern for Bitcoin, as of right now, this potential head and shoulders pattern is not yet completed or confirmed for the price of ETH on the 4-hour time frame. And so basically, in order to complete this potential head and shoulders pattern for the price of ETH, which would be a bearish pattern if it completes, we would have to form this right shoulder and then see a break below this neckline, which once again is sitting at around 37.20 approximately. And so if we see that play out, if we see the right shoulder complete and a break below the neckline, that would set up a short-term bearish price target for this head and shoulders pattern at around 34.70. And so from the point of the breakdown to that price target, we're looking at potentially around a 6 to 7% move to the downside in the price of ETH if the pattern confirms with a confirmed break below that neckline, which as of right now has not yet happened. And so at least for now, this is not something to act on, but it is something to at least pay attention to while it is potentially forming. And if we're taking a quick look at the price of Solana on the 8-hour time frame, as of right now, we're still finding a bit of support at around 160. But if we break below $160, we could likely see a move back down towards the low 140s, because we have major support in that area in between around 140 to 144. And I must say that at the moment, the price structure is starting to look more bearish, as the price is starting to form lower highs in the short term, while we're seeing relatively horizontal lows, which basically shows an increasing amount of selling pressure, while the buyers are not really keeping up. And so basically, in order to flip much more bullish again in the short term, we need to break out above this previous high, which is sitting at approximately $172. And so in that scenario, if we confirm a breakout above around 172, then in that case, we could likely return back up towards this previous high, sitting closer towards around 187. But at least in the imminent short term, we're looking relatively neutral, with some new bearish price structure beginning to form, and that will officially flip more bearish again in the short term if we break below 160. That will be the bearish signal to watch out for if we break below 160. And once again, if you want to trade these moves in the price of any crypto, check out those links down below this video to claim those extra bonuses. And if you want to actually know how to trade the price of any crypto, no matter if the price is bullish, bearish, or chopping around sideways, then make sure to watch these videos popping up right here on your screen. The video in the top left shows you how you can profit from bullish or bearish price action using long positions or short positions, and the video in the bottom left shows you how you can easily profit from choppy sideways price action. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.